Okay, let's go ahead and receive payments from our clients. But before we do, we have a credit memo, right? Credit memos, what do? They reduce our accounts receivables, right? And in this instance, the discount is applied to food and snacks. Now, let's see. We don't necessarily booked it at the level of the details, but still, let's go ahead and enter it, see how it all works out. Right? Customer. So you see our open balance with them is basically zero. All right. So if we apply it to their account, it's going to just stay there and then it will mess things up because that tells us that we booked it. Again, it has nothing to do with debit and credit, but it will cause an issue. So what we'll do is we're not going to use this. We're going to do the same level, right? So we're going to go company, make general journal entry. Okay. Post. And we're going to post it like we described to you previously. And you see what's important is that knowledge of those interfaces, knowledge of debits and credits allows you to, if you have to kind of hurry and book them quickly, you can go through general journal entry. Um, and again, you know what to debit, what to credit. So in this instance, like I said, one thing for sure, accounts receivable is going down, right? Because we owe this much money to the client, and we said, all right, we're going to give you a discount of $349.50, which means you owe us that much less. So credit accounts receivable. There it is. Um, let's put that in there. We could put the invoice number too, just so that we have all information. All right. Again, the memo field allows us to use quite a bit. So, okay, what else? What else is happening? All right. Accounts receivable goes down. We didn't make as much money as we thought. We thought we earned this $349.50 and we didn't earn them. So, what are we going to do? Right? We're going to reduce our 41,000. And since it's not a posting account, we're going to post it to 41,900. There it is. And we can add the name of the client in here. Okay, there it is. You see your debits and credits, they're right there. You're good to go. Okay. Save and close on this one. And now we can move on to receiving payments. All right, so previously, again, as we've done before, vendors, right? Let's see. So sorry, customers receive payments. All right. So our first payment is properties. We did that one in detail, remember? So we can definitely post this one, just like we did in previous interfaces. 5/16/2021. All right, let's check number. All right, so we have our debits and credits here. Let's explain them in our window, right? So what's happening? So basically, there are only two accounts that are being impacted right now. That's accounts receivables, right? Because we're receiving, so we're reducing accounts receivables, and being an asset, it is reduced when credited. All right, what else? Well, we're increasing something, right? And that's the number of checks that we receive and we put in the drawer. That's our undeposited funds, and that's our 12,000. So again, this is essentially the check that we received right here. Therefore, it is a debit to account 12,000 undeposited funds. That check is now in our drawer. and undeposited funds are an asset, and assets go up when debited. And then this amount right here, that's what reduces our accounts receivable, account 11,000, and it's a credit to account 11,000. All right, so we're done booking this one, save and new. All right, next we have temp services. And you can see there's nothing there because the first one was the only one that we entered at the level of the detail through the module. The rest of them will not be recognized. You can see that right here, right? However, I'll show you one little thing. By balance sheet, right? Because accounts receivable is a balance sheet account. Remember that credit memo that we posted? That's why I'm dating it 4th. See accounts receivable? We have the balance. It's right here. $151,551.75. Right? So that tells us that somebody owes us that money. Right? And essentially, well, that's accrual. That's cash. That's the remaining money. The accrual is because we haven't deposited it yet. Right, so that's essentially the amount of money that these are all those entries you can see right here, right? I just want to show you that, some would say, well, if you are not maintaining the level of the details at the customer level, why are you doing all this? Well, that's the reason, right? Because, yeah, it may take me some research, and again, I know it's outside of debits and credits, but still, I want to show you that. It may take me some research to find out who owes me money by clicking through all that and seeing what's outstanding, right? But I know how much money I'm owed, right? And you can see the accruals, right? They include the item we just booked, right? And the reason they do is because it hasn't cleared. But see, cash basis. Right, so that's our accounts receivables. So let's go ahead and book again the payments that we're receiving into undeposited funds for now, because we're going to stick to that. And then we'll see that accounts receivables will be continuously reduced. And so we can't use this one. There's absolutely, no point because it will just mess it up. There's nowhere to apply it. And you can look through, we can look through any of these clients. There's nothing, no unpaid invoices. All right. But what we can do is we can go to general journal entry, right? And we can just go, for example, by date for now, 5/16. So again, we won't be able to necessarily maintain all this level of the details, but we can do, for example, client payments 05/22 or 1. And then whatever it takes, and we can do one of them per date essentially, right? Because they all have individual dates. So let's get on it. So what's happening here? Very much standard, like our accounts receivables will be going down, right? And our undeposited funds will be going up. Now remember, as we've learned before from previous booking, is that we can only use accounts receivable once. That's just the feature of QuickBooks. They must have had a good reason. So what we're going to book is undeposited funds. So remember, previously we were hitting sales and accounts receivable. Now we'll be hitting undeposited funds one after another because these are checks that are going into there. Each one of them is an impact on undeposited funds. And As a result, the sum of them will reduce accounts receivable. So let's go ahead and do that. So undeposited funds is 12,000, and it's an asset, and it will be debiting. All right, they're going up. They're going up, and you can see the patterns now. It's much better. Okay, 705, and here I'm going to put the, for example, one way to do it is jerk, and then invoice. So you see, I'm still, I mean, and sometimes you sacrifice even that, but you see, I am capable of maintaining certain level of the details. I have my check number, I have my invoice number. All right, not everything, but it ain't too bad. So let me see, I'm gonna try and get as many as I can. I don't know how many we have. Oh, it copied it. Okay, that's fine. So we'll just check. Right? So we'll just keep going. 16th. That's the one with the discount, but it's already applied here. And remember, we already applied that discount to accounts receivable as well. So at the end of the month, our accounts receivable, after we receive all these payments, and we'll show you on the report, should be 0. $64. So here we are. More on 16th. Yep. As long as I don't make a typo on the amounts, we should be good to go on the balance of the accounts receivables. 16, that's great. Okay, next one is 17, so let's stop right here. So basically we received 1, 2, 3, 4, 5 checks that we're booking in one transaction. And on the left hand side you can see all of these checks that we received. Well, except the first one. First one we received through the module, starting this one. So these are the checks that we received, right? So we're putting them on the debit to go up for undeposited funds because undeposited funds are an asset. And then once they're summed for that day, we're reducing our accounts receivable by that much because we're no longer expecting that money from others, right? And that becomes a credit to our accounts receivables. I'm just going to show you something real quick here. You see, these are our transactions. Again, my date goes through 4, but I'm going to extend it through 16 now. And again, it just shows this one, right, for 380. It's a wash, nothing changes. Very clean, much cleaner. All right, on accruals, and this is on cash. All right, and so let me book this one and you'll see. Save and close. Okay, you see that? We receive these payments, right? And they're reducing the balance of the account receivable balance, right? Because we received it, right? And they credited it, and being an asset, it reduced, just like by previous payment. All right, so let's move on with booking the rest of them. One way that we could book them all in one transaction is by the last date, right? By the last date, for example, of the month or the last date of the deposit, that the last deposit we received. So let's, for example, do that. Now I want to memorize it. All right, so see again, for example, if we do, you see our accounts receivable balance just dropped because we received some money. But I'll go back for a second. But our undeposited funds went up. You see that? Previously it was zero. So for example, if I just go to the date before we started getting funds, you see I don't have undeposited funds, but I do have that money in my accounts receivable. Then I go to 16th, my accounts receivable went down, my undeposited went up due to those transactions that we just booked. Anyway, let's book the rest of it using the end of the month. All right, and now we're just going to book the rest of them using the end of the month date. Um, Again, all we'll be doing is we'll be increasing our undeposited funds by each one of these amounts, and at the end of once we have the lump sum, that lump sum will reduce our accounts receivables. Again, we'll sacrifice a great deal of detail, but we will have that accuracy at the month level if we again just go by the end of the month, because clearly like this check was received on 17th, so if we run report on 18th, right, it will not be reflected using this type of booking, but it will be reflected, for example, if we run it as of beginning of next month, which is June 1st. Anyway, let's get going. Undeposited funds, the whole time for this transaction, undeposited funds will be increasing because we're putting those checks in the drawer. And check 2140. Should I adjust the check number as we go? All right, this one is done. Next one. Check number. Next one. Again, you see we can maintain certain level of the details using the memo, so it's not the end of the world. Again, as long as naming conventions are stable and you're capable of doing that, that serves the purpose. Okay, so again, you see we're debiting undeposited funds, so all that's happening is it reflects that we're putting those checks in the drawer from which we will deposit it. So those undeposited funds, as a result of us receiving that payments, are going up. So again, each one of these payments that we receive reduces accounts receivable, but the way QuickBooks works, and it saves us some space, we get to hit accounts receivable once. Therefore, what we're doing is we're saying, okay, we received it, what does it do? And then we'll lump sum work hit accounts receivable. It increases undeposited funds. So each one of these entries is a debit to undeposited funds, which again, being an asset, it increases undeposited funds. Just want to make sure we maintain the level of the details, at least through our memo box. So again, each one of those items that we're entering, it's a debit to undeposited funds, and it increases that account because it's an asset. It's 5. 4. And let's see. Oh, it's 5. There we are. All right, another debit to undeposited funds because it's a check that we put in the drawer, right? 5986. Right, there. So again, the only thing is, I guess, to remember it. No, not the only thing, but among things to remember is that be consistent, right? If there is a certain sequence associated with the module, then once you disrupt that sequence and you stop using the module, it becomes problematic on using it again. So you gotta stick, like in this case, to general journal entries, right? Um, it's 2, 6, 4, 6, 31, 25, 6, 8, 5, 0, 7, 10, 0. All right, almost there. Right, few more, but look at the speed, relative speed comparatively. When we sacrifice that level of the detail, that's pretty incredible if you ask me. We need few more, right, undeposited funds. Clearly, we're running out of space, so let's make some more placeholders for us. And 5, 3, 6, 250. 4. Okay, 5145. Not good. Oops. Invoice. Right, there's quite a few receipts that we gotta enter. And again, once we disrupted, remember all those entries, we can just click the box, but still we do know debits and credits, and it illustrates to you that, debits to credits, if you go back to those previous videos, are the same. Interfaces are different, but debits and credits are the same, and that's what's very important to understand. I cannot stress enough. Because again, if you understand the debits and credits behind each interface, it doesn't matter which interface you use, since you'll be able to essentially figure it out and make sure that you're posting entries correctly. 50. More, more. Check number 037, invoice 17, there it is. See, this one is 975, 5565. 67, 7, that 50. Almost done with the deposits. And, I mean, not deposits, receipt of payments from the clients. So that's going to be fun, right? Because it's going to be one long journal entry. Demonstrate interesting concepts where it's definitely not enough screen, but again, to me, it just makes it more interesting. 4750. This one is still one. 625, and I believe that's the last one. 9, 7. It's the last one. So all of this will go and hit our accounts receivable. So just remove this, and it's gonna be here. And let's go stay everywhere. So I'll say unassociated. But you can see that, we posted quite a few payments from clients, right? Quite a few checks that we received in one transaction. Now, they were received on different dates. Thus, we could only use one date. We had to pick one. So typically, again, what I recommend is using it at the last date. So in this case, it would be a 521 or 531. Honestly, makes very little difference. It just on when you run the report, right? Well, let's do like 130 21. And the reason I wouldn't use earlier date is that some of the payments were not received prior to that date. So if you run your accounts receivable report, it would be misleading. And I'd rather have it been misleading the other way, telling you, oh, you haven't received it, than, oh, yeah, you received it when you didn't. Anyway, here it is. Let's go ahead and save and close it. You can see that, there is each one line item there is essentially receipt, right? And we received, oh, that's our invoice. So the first one we received through the module, through the billing module, and then the rest we just booked right here. This one, right? Starting with this one, we booked in one long transaction, general journal transaction, right? That's all of this, and each one of these totals again is a debit to undeposited funds, increases that because undeposited funds is an asset, right? So here all of them are, and each one of those that I'm going through the screen right now is a line item right here. It's a debit, and then the sum of them is a credit to accounts receivables because it reduces the accounts receivable account by that much. And accounts receivable is an asset, and therefore it is reduced when it is credited. So yes, yeah, I'm still scrolling, still scrolling, still scrolling. There it is. That's the last item. So let's go ahead and save and close. Okay, and let's take a look at our balance sheet here and update it. There it is. And you can see that our undeposited funds, let's see, for example, if you do, right, so you can see that we have undeposited funds, and this, we have accounts receivables, and our undeposited funds is much less, right? So again, and if we go at the beginning, right, we don't have any undeposited funds. And if we go end of the month, all of that money from accounts receivable is on undeposited funds, right? So that's what happened. We moved essentially all of this invoices that we booked into accounts receivable from accounts receivable to undeposited funds, and you can see that if we change the date. All right, so next we're going to go ahead and deposit that, and essentially, again, very similar, we're going to move it from one asset into another asset, from undeposited funds to our bank account.